I'm super excited for this one, part 2 of hiring your children. Thank you so much for the feedback. I originally made a short version of this post back in, I don't remember, early June, and I've received several questions. Several persons wanted the implementation guide, and I just wanted to make sure that I answer all those questions. And I have a new version of the implementation guide that also lists the roles that you can hire your kids for and have some step-by-step instruction. So right now as we speak, what I'm gonna do is I'm gonna go through let me see how many steps I have. It's 6 steps implementation on how you can start doing this actually today. And I'm gonna also show you how you can get more than the $12,000 written off on your business. So this is part 2 of the hire your kids to get tax deductions on your business. So this will work if you're a business owner. So whether you're a business owner with LLC, if you are partnership, or if you're an S corporation, this will work for you. So I'm super excited to go through this guide. And as I go through these steps, you can also request the guide from me, and we will be happy to send you the updated version that basically helps you to pick what roles you're gonna hire your kids for. Okay, so the first thing that you're gonna wanna do is to look at how many children you have and their ages. So you wanna make sure that whatever you're gonna document that you're gonna hire your child for, it's age appropriate, because we have to document, because documentation is the only way you're gonna keep your deduction. Because there are 2 things about taxes that a lot of business owners don't understand, is that you can deduct anything that you want. You can deduct anything that you want, but this documentation is a key, and is it a legitimate business deduction? And those are the things that if you get audited by ours, and those are the things that you have to consistently prove. So your child age is the key. So after you've determined how many children you have, say that you have 2 of them, and one is 5 and one is, they have to be under 18 for what I'm going to talk about right now, in order for them not to, Diane's KGC is great as no employment tax. Exactly, no employment tax, but if you're an S corporation, you will have some employment tax just because you are an owner employee of your S corporation. So that tax structure is a bit different, but we can talk about that as well. So what happens here is you pick what role you want to hire your child for that is age appropriate. So you can refer to page 3 of the guide that I have, I think, 28 different roles that you can hire your under 18 child for. So when you go through those 28 roles, you see, which one. Make sure that it's a business need. You don't want to be hiring them for something that you absolutely don't want in your business. You can be creative, but make sure that it's a current business need. And as I mentioned, the child's age. So those 2 has to come together. And I have 28 listed on that page. You can be creative, you can combine things, you can do whatever you want to do. The only requirement is this has to be legitimate work. They have to do legitimate work in your business. There's not a hours requirement. There's not a number of days requirement or anything. They just have to do legitimate work. The next thing that you're gonna do, so we're on step 3. So step 1 is to identify your child's age. Step 2 is to refer to page 3 of the implementation guide to see what roles you can pick and what you're looking to hire someone for in your business. And then step 3 now is, what's a reasonable rate that you can pay your child? You can get this information from several job boards, job website that you can go in and plug in the role or find similar role to see what are the going pay rate for if a independent company hires someone else, what would be the pay rate. So there's not really sort of a reduction in rate just because of age. You just have to make sure that whatever role that you assign to them, like for instance, a 5-year-old can't use social media, right? It just have to be appropriate, and then you use those rates. So what I will tell you is to go ahead and document the research that you have done to find out what rate to pay your child so that you have that as a reasonable market rate. So step 4 is to, okay, that's 4. That's 4. Step 4 is to look at how much money you're going to be saving. So the first hoop that you have to jump through is a $12,000 bracket, the $12,000 limit. So the first $12,000 due to the new standard deduction will get completely wiped out and no tax on that amount. Now, the second step is you can add $5,500 to that, making it $18,500. And how you do that is to open, let's say, a IRA plan for your child. So $5,500 of that money will go into this IRA plan as a contribution for the year, and then the next $12,000 will, go on their tax return as earnings for the year. So they'll earn a total of $18,500, but $5,500 of that will go to an IRA plan. So you, as the business owner, will get $18,500 as the business deduction. Hey, Gloria. The third thing is also, so we're at $18,500 now that you can get by adding an IRA and something. And I will also talk about how you can get out of that IRA without paying any penalties and also without paying any tax later years down the road, because whatever sort of, investments and so forth that you get into, you have to look at your exit strategy for them as well. So the third thing you're going to do that you can also look at is, in addition to the $18,500, can you do some also income shifting? Now what this means is if you pay them a little more, say $10,000 more, so that would make it $28,500. What can happen is that you probably can be able to have them pay tax on that additional $10,000, but their tax rate is going to be significantly lower, let's say 10%, just because that income limit is so small. So they would get the $12,000 plus the $5,500 tax-free, then the $10,000 that they'll get, let's say they have to pay tax on it because that's outside the $18,500 limit. So that $10,000, if they pay tax on it, they'll pay tax at a lower tax rate. If you didn't pay them that additional $10,000, and let's say that your tax rate is about, say, anywhere from 25 to 39%, then your rate would have been higher. So it would be cheaper for you to pay them that additional $10,000, even though they would pay some tax on it, but their tax rate would be much lower on there just because of how the tax system works, that you pay tax based on the different buckets of income that you have. You just don't say, okay, I'm making, $300,000, my tax rate is 30%. That's not how it works. You pay based on your different income tiers. So you only pay additional taxes on each additional dollar that you make. So that's step, let's see, that was step 4. And so step 4 is the $12,000. You can add an IRA to it, which is the $5,500, and then you can add some income shifting to it, which is the $10,000. So that gives you a total of $28,500. The income shifting amount can be any amount. You just have to run the numbers to see, is it cheaper for the family for you to push that to your child, or is it best for you to keep it in a business? And this will be all legitimate, tax deduction. Step 5 is the exit strategy for the IRA. Currently, and these rules change, tax rules change every year. But for the IRA, this has been pretty consistent for the past, let's say, I don't know, I've been in this business for the past, 10 years, and it hasn't changed. That if you contribute to an IRA plan and you take the money out for educational, there are certain provisions that you can take the money out. If you meet those criteria, then the money will be penalty-free, not tax-free, sorry. It will be penalty-free. So if you do an early withdrawal of the IRA, if you add the 5,500, when you withdraw it and early, and it's a young child, so they may want the money to go to college or something like that, then there's a 10% penalty. If you withdraw that money and meet one of the criteria, such as, first-time home buyer, and next one is, for educational expenses, then you won't have to pay that 10% penalty. So that's one of the things that you have to think about as far as that. This is how I'm going to exit this IRA. Your child's going to get them pull out the money without paying penalties or taxes on it. The next thing that you have to do is, like, when they withdraw the money, that becomes taxable. So this is only the 5,500 that I'm talking about, only the 5,500. So when they withdraw that 5,500, it's going to be a penalty and tax. We thought that I just said that if they meet the criteria for the tax, for the penalty exempt amount, educational, first-time home, and there are a list of other requirements that they'll not pay a penalty on it. And the second requirement is their income at that period of time. If they're not making a lot of income at that time period, then it basically would help them to basically wipe out how much they're going to be pulling out of that IRA plan at that time. So they can pretty much, with good planning, your child can pretty much, for that year when they're planning to pull out the money to go to school or to buy a home or whatever, that they'll be able to plan they'll be able to plan accordingly, so that they'll be able to take that money out without paying any tax on it. And step number 6 is documentation. This is the most important part, and I can't even stress I can't even say the word. I can't even stress this. Documentation, documentation, documentation. We want to make sure that you get the deduction, but we want to make sure that you can keep the deduction in the event of an audit. As a business owner, your chances of being audited is like 400% more than when you're an employee. So we want to make sure that we document. So if you're any single tax strategy that you implement, you want to make sure that you're documenting it properly. For the higher child, what you're going to have to document is you're going to have to save the information to validate the pay rate that you're charging them. And as I said, that you can get this information online. You can search jobs website and so forth. So you save that information. You're going to have to save information that they're actually working, so whether it's timesheets, updating your job duties or your employee manuals and stuff like that, you have to keep something that shows that your child is actually doing work for you. So I would say to do some kind of timesheet, you can do it in Excel or have some kind of automated time tracking, something. You can update your employee's manual or something to show you can add the job duties, and all of that. Just have everything documented so that you're able to show that this was a legitimate working position in your business. And the last step is also tax compliance. How do you get compliant with taxes? So if you're filing as a Schedule C filer or a partnership, so that means that you're an LLC or your LLC with 2 persons has partners, so you're 2-person LLC. So in that case, you have to issue your child a 1099. This is compliance reason. Your child doesn't have to pay any self-employment taxes on the 1099 because there's a provision in the IRS code that basically if you are a partnership or a Schedule C and you have your child working, then it's basically exempt based on their age from employment taxes. If you're an S Corp, however, or a C Corp, you do have to pay some employment taxes on that amount. And this is because the S Corp and the C Corp, they are completely independent of the owner. When you have an S Corp, you're an owner employee. When you have an LLC, you're a member manager, or I don't know what the attorneys call it. But for the IRS purposes, when you have a C Corp and a S Corporation, you are a owner employee. You're an owner employee. So as such, you can't really put your child in that, business owner position as if you were filing a Schedule C. But I can tell you that once you run the numbers with all the benefits that you can get from each legal structure, then you can decide which one would be save you the most money. For some people, it's S Corps. For some people, well, I guess I haven't seen a scenario where it's Schedule C, but for some people, it's S Corps, is C Corps, or if they have multiple partners, it's partnership. But it's the self-employment tax on Schedule C is a bit high, so it depends on how much money you're paying self-employment tax on to make it really legitimate. So you have to add up all your tax strategies to see which one is going to make you more money. But those are if you are a Schedule C filer, or if you're a partnership, you will have to file 1099s for your child. Then they will get exempt out of the taxes if you're following the rules. And if you're an S Corporation, then you do have to put your child on payroll, take some FICA taxes, but they won't have to pay any income tax on the balance of that amount. So you can work out what the numbers are going to be like so that you can get, either the 12,000 or the 18,500 or more if you decide to, do any sort of income shifting. As I said, I have updated my step-by-step implementation guide, and now there's some more ideas on how you can, basically start implementing this right now. There are more information on how you can start doing that, and also some ideas on what are some of the roles that you can basically hire your child for to be able to take advantage of this strategy. So if you want to see the new guide, you can go ahead and send me a message and we will send it over to you. If you have any questions about the different income buckets or the different amounts that you can also deduct, then you can also send me a message with any questions that you have, and I will be happy to answer them. The last thing that I have for today is the launch of my new program for consultants. We're making over $100,000. So you're in the fast, growing phase. This is the first time you've been in business and you just start making a lot of money quickly. That is great, and I am so excited. I've been working with business owners for the past 4 years, one-on-one, and just the tax stuff alone that I just get a lot of message from, and it's just, a lot of people, they just don't know. Business owners, they're losing a lot of deductions. They don't know what strategies to implement just because they just don't know a lot about taxes. Currently, my clients, they're able to save $20,000 or more just from tax saving strategies that we're able to implement on time. So when you talk about taxes, you have to talk about the implementation, because you have to do it in advance then you get to claim the deduction on your return. This is not something you can do when you're ready to file your tax return. So when you look at, $20,000 plus on tax savings, when you think about, when you add, profit margins, savings that you're able to implement because you know more information about your business, finances, and what about, cash management strategies that you can also implement to keep more cash in your pocket. This is not to increase income or anything, just to keep more cash of what you're already making in your pocket. So when you add all three, the tax, increasing your profit margin, and tax and cash saving strategies, those all just result in numerous cash saving, money saving at the end of each month. And this is money that you get to keep. This is not money that is somewhere out there on paper, like your profit number. This is money that you're actually seeing in your bank. And one of the things that you want to make sure when you're doing taxes is to make sure whatever money you save, you're seeing it in your bank. That's the trick. Whatever deduction you're taking, you can get the money. So that's one of the best things that you can do, that you're actually going to have the cash, because that's the ultimate reward, and that's how you start to put away money, start your wealth building or your money mindset things, so that you can start grow your business and start having more money. So the number one concern that I find that business owners is having, or number one issue that I find, that they're overpaying on taxes. $10,000 or more each year, just because they just don't know. That is a hard price to pay, and this is not even money that the IRS is asking for. This is the 2018 Tax Cut and Jobs Act. So this is the new tax code update that was in the news. When was it, earlier this year or late last year, under the Trump administration. So this is only an update for 2018, and 90% of this stuff, it probably even be 95%. 90% of this stuff is for business owners. So there's a lot of juicy stuff. There's a lot of money saving things that you have to take advantage of in 2018, and you can't wait until next year tax filing season. It's the clock expire on tax deduction on December 31st each year. So just this alone will give you a lot of money back if you fall into that income bracket. So every different income bracket that you fall into, then you will be able, then the different tax strategies that you can implement also increase. Like the more income you're making, the more money you're basically overpaying that you're able to save. So one of the reasons why I'm launching this program is because I'm just simple tired. I don't like to see when business owners, I'm a business owner myself, I know the hard work that you put in, and what it takes to basically execute a business, do it every day, and find something that you love to do. Taxes, money saving, cash flow, profit margin, that's what I'm great at. That's what I'm excited about. So I want to help you to save as much money as you can, keep as much money as you can. It's not how much you make, it's how much you're able to keep. So that's one of the passion point and driving forces to launching this program. So as I mentioned, this is only for 4 weeks, and this is for consultants who are in the fast growing path of their business, that they're starting to make a lot of money, over 100K, and they want to understand how to get the best use of their money. Are you looking at where you can put some of that extra cash? I mean, what's your investor profile, and what are some of the decisions that you can make so that you can consistently generate cash flow? Also, how can you put more cash into your pocket, and by finding hidden cash leakages in your business and even in your personal life? How can you go in and plug those cash leakages, holes in your business, so that you can start seeing more cash and turn around more cash? Other areas that I'm going to also look at is, how are you able to protect your business? What are some of the strategies that you have in place that will also return cash for you? So this is all about increasing the amount of cash that you can keep in your life in a more holistic and effective way when you combine, tax savings, protection planning. What are some of the ways that you want to use your business to generate investment income to continue to lower your tax rate in the future? And also, what are some of the strategies that you can implement to just keep money? What about documentation? Your business is growing fast, you're making a lot of money. Are you on board with documentation in case you get audited? As I mentioned, as a business owner, you are 400 times more likely to get audited than ever before. So this is not about you keeping your bank statements or your credit card statement. That is just completely wrong information. The IRS doesn't care about your bank statement. If they request your bank statements, you're in big trouble, basically. So you don't want them to request your bank statements. So this is not about your bank statement or your credit card statement. And I know that this is a big misunderstanding in the market among business owners, that they think that all they need for IRS protection is their bank statement or their credit card statement. And this is completely untrue. So if you want to learn more about this 4 weeks program that will help you as a consultant that is growing your business pretty fast and making over 100K, you can send me a message and I will be happy to answer any questions that you have. I want to make sure that you're the right fit, and also you want to make sure that you're the right fit. So we can go ahead and send me a message and I'll be able to answer any questions that you may have. If you have any questions regarding the higher your child, different income levels that you can deduct, then I will be happy to answer those questions as well. But I'm very excited, happy saving money, happy scaling your business, happy growing, happy making a lot of money. I'm here to help you to keep the money that you're already making. Have a good day.